Hello. So the US oil commodity is going to be another instrument that we are going to be including into our watch list for the new week and for the new month actually. As in this video, we are going to be taking a technical dissection of the current market structure to identify a potential trading opportunity for us in the coming week. And on this note, I welcome you to another promising session as I have found a very simple setup that I think we can use to guide our trading activity for the week. And considering the fact that this is a follow up detail to my previous analysis, I would like to share with you some key moments that we had, as this will give us a background knowledge of where we are coming from as we get prepared for the new week when we shall be projecting what our expectation is going to be like. And so, talking about last week trading session, we had this whole situation at the beginning of the week where we were able to identify this simple setup on the 1 hour time frame where price action was initially trading within the $77.65 level and the $77.69 area, which you can see on your screen. And it was on the basis of this simple structure that we were looking out for our first buy or sell position for the week. So following this whole situation, we begin to see bullish momentum which took us and broke the resistance line and the $78 mark, which happened to be our key level for last week, hereby giving us our first and second buy position for the week. So as you can see here, this was how the trade went by, and we continued to add more position until we saw this whole situation where price action was trapped within a range just right at the retest of the trend line that was broken during the penultimate week. And at this point, we anticipate that bearish move, and we were able to be part of that move as we rode the move all the way to the downside. So it was quite an interesting situation for us on the US oil, and the US oil happened to be one of the most profitable trade for us during the course of last week's trading session. So this is how the week went by for us, and if you do want to do a one-on-one review of how we took advantage of all of these positions, we'll be dropping the link to this commentary right in the detail box below. And for those who are watching this video from my YouTube channel, you will be seeing the link to this commentary situated at the top right hand side of your screen right now. So with that being said here, let's dive right into the business for today. And the first thing we normally do is to take an holistic point of view of what is really going on in this market. And to do that, we want to look at the daily time frame. Obviously, we have been on the bearish turn. If I zoom out a little bit here, you will see that since the second half of last year, price action has actually been bearish in this market, and the trend line you can see on your screen further emphasizes the importance and strength of the sellers at this point in the market. However, things got a little bit more interesting during the month of November last year, where we saw this whole situation here, where price action was trapped within a channel between the $82 mark and the $70 area for over 4 to 5 months in this market. Then we also had the situation where price respected the trend line one more time, an area which also shares a confluence with the supply zone in this market, leading into a situation where we had this old bearish move to the downside, which at this point in time, I am considering it to be a retracement of the previous impulse leg that started in the month of March. Now, the question at this point is, how far will this retracement phase go before another wave of bullish momentum will happen in this market, if this is going to turn out to be a trend continuation to the upside? Or are we going to be having a situation where price will transition into structures that will support a sell-off in this market? So these are the things we are going to be looking at during this course of the video. And in order to have a better perspective into what is really going on here, we shall be scaling down into the lower time frame, the 4 hours time frame, of course, where I was able to identify a simple setup that I think we can use to guide our trading activity for this week. However, before we go into the 4 hours time frame, I would like to share with you one more important data here, which will be the basis upon which we are going to be deciding what our next line of action will be for this week. And that is the consideration of this impulsive move here, which at this point I think is going through a retracement phase at this point. And the question right now is, how far is this retracement going to go? As the retracement culminated right now, and are we going to be getting ready to join a bullish move? And in order to have an idea of where the retracement phase is likely going to be going, I was able to bring out my Fibonacci retracement tool, run it through the previous impulse leg here, and aim at an area. Sorry, this is where I chose here instead, this one here. So I aimed at the golden zone area, which is normally situated between the 50 and the 78.6% of the previous impulse leg, which is the structure I was able to identify here as my potential demand zone. So at this point in time, I want to see price action drop into anywhere within the structure where the appearance of a reversal pattern by impression my lower time frame will give me the confirmation to look out for buying opportunity. So with this whole situation here and the information we have gathered on the daily time frame, we are now going down into the 4 hours time frame, where I will be taking you through that simple setup I was able to identify. So scaling down into the 4 hours time frame, this is what I was able to spot on this chart. So if you look at this whole situation, I have two key levels on this chart. That is the $74 mark, as you can see on your screen right now. And I also have the $77 area, which will be serving as our key level for this week. And you know what we mean when we say it's a key level. That means that area was going to be a major determinant of price movement in the coming week, where if price action ever breaks out of that key level, then we look out for buying opportunity. And if price action continues to trade below the structure with selling pressure below the key level, then we will be looking out for selling opportunities. And what makes this whole structure, this whole setup more interesting is the fact that we have a descending channel which has emphasized the strength of the sellers in this market since the second week of the month of April. And in order to do this, I was able to connect a series of lower highs and lower lows to give me this trend, this descending channel you can see on your screen. Now, if I zoom right into what has been happening in this market in the last couple of weeks, you will see how the $77 area and the $74 level is going to be serving as our yardstick for trading activity this week. Now, one thing about the $77 area is that this is where price action closed during the course of last week's trading session, just right below that structure here, which also shares a beautiful confluence with the resistant line of that descending channel, giving us a beautiful confluence to look out for trading opportunity in the new week. So at this point in time, you would agree with me that we are at a critical point in the market where, depending on how price action reacts to this confluence, will determine if we are going to be buying or selling for this week. So to sell the US oil this week, definitely if selling pressure continues below the $77 level, which also lines up with the resistant line of the descending channel at this point, then we might be in for a bearish move to the downside, where a further breakdown of the $74 level will welcome more opportunities to add more position to our existing trade. However, if the contrary happens here and instead we have price action break out of the $77 mark, then at this point we will have seen a breakout of the resistant line, which is probably going to be a sign that the trend line there is no longer strong enough to resist the buying pressure in that market. And if we are lucky enough, when we scale down to our lower time frame and we begin to see some buy pressure retest of structure evolving into a reversal pattern supporting a trend continuation to the upside, then we are going to be in to add more position to our existing trade. Now, you would agree with me that the $77 mark is a very key important structure that we are going to be using to guide our trading activity for this week. Be rest assured that I will be with you in the comment section on both my TradingView platform to give you an update on what I think is going to be happening in this market after monitoring how participants in this market will be reacting to this current structure around the $77 mark in anticipation of the new week. I do hope this video has been of immense help in making your personal decision on the US oil spot for this week, and if it truly did, I would really appreciate that you support this project by clicking the like button. You might also want to follow me on my TradingView platform at Dark Sherry. Just right at the top right hand side of your screen, you will see the hide detail there to be part of the regular commentaries I normally share in the comment section of all of my videos. Thank you for watching this video, and I look forward to seeing you right in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye-bye.